Hello my friends, Peter with Never 6%, and today we're going to be talking about the 1031 exchange and something a little different, a reverse 1031 exchange. And for people that don't know, a 1031 exchange is used to defer taxes when selling investment properties. So this is not properties that are homesteaded, but investment properties like rental properties, other type of properties that you want to sell and defer the taxes so you don't pay capital gains tax. So we're going to get right into it today. So as mentioned, my friends, a 1031 exchange allows you to defer taxes, capital gain taxes, by reinvesting the proceeds. And that's so important because when you're going to be doing this type of transaction, you're going to use what is called a 1031 exchange company, which is a third-party entity that acts like a middleman in this type of exchange. Now, you're going to have to find something that's similar in the nature of what you're selling for the 1031 exchange. So say you have two single-family residential investment homes, you're going to probably find something similar to that. If you have an apartment building that you're selling and you're deferring the taxes in the 1031 exchange, you're going to have to buy something similar in nature to that, that is a like exchange as they call it. And this would have to be approved by the 1031 exchange company so you're able to defer the taxes as mentioned. So we're going to talk about, again, the 1031 exchange is standard one and the reverse 1031 exchange. But first, let's talk about the standard 1031 exchange. You're going to sell your relinquished property first, and then you have a limited time frame to go ahead and find another property, 45 days to identify a property and 180 days to close on that property to purchase as a replacement. Okay, so we briefly touched on the 1031 exchange, the standard one. Now, the reverse 1031 exchange is a little different because you're going to purchase the replacement property first before you sell your relinquished property. You still have 180 days to sell your relinquished property after purchasing the replacement. So it's kind of in reverse as noted, 1031 exchange reverse. So if you come across a property and you have your relinquished property that you haven't sold yet, and you find a good deal, definitely do the reverse 1031 exchange. It makes sense because time is of the essence. You have 45 days to identify a property on 180 days to close on a property. So these are the rules in order to defer the capital gains tax. Thank you so much for watching my video. Please subscribe to my channel. These are some basic notes, information about the standard 1031 exchange and the reverse 1031 exchange a lot of people don't talk about. As an investor, you need to know this information. Of course, to defer taxes, you don't want to pay capital gains tax at all, right? You need to defer it. So please, any questions you have, I'm going to leave my number on the screen. You can call or text me. Please subscribe again and see you in the next video.